Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, good morning, everybody. And you might notice a slight change, and we didn't change the intro there, but unfortunately, Curtis is not with us this morning. He's having the delights of walking Molly down in Cornwall this week, as we discussed last week. And hopefully the weather's probably good enough for doing a bit of walking, but not too good that he doesn't get the opportunity to spend a little bit of time in the pubs there on the coast of Cornwall. But today, I actually have the pleasure of being joined again by Karl Davis. So, Karl, you'll remember that Karl joined Curtis when I was having a holiday recently, and I think he enjoyed it that much that he's come back on. So hi, Karl, and welcome back onto the podcast.
Hi, Phil. I must admit I don't get out much, so I'd rock up for the opening of an envelope if I was asked.
Firstly, thanks for doing this. Thanks for jumping in. I know you enjoyed it. The feedback, I think, was extremely positive last time you were on doing it with Curtis. And it gives Curtis the chance to have a little bit of time off, and I think we can look at things a little bit slightly differently, can't we, with yourself?
I don't think anybody would ever have described Karl Davis as sort of mainstream or vanilla. So hold on to your hats.
Yeah, good. So we're going to have a bit of a chat later on, but to begin with, we have got a couple of shout outs this week just to cite people too. So the first one is a story that's being covered this week in AM Online, and this is a charity walk for CALM, that's CALM, in memory of the late ATG and Nissan executive Mark Hamilton. So the walk is, as I said, in memory of the former ATG, Nissan, Audi and Mercedes executive Mark Hamilton. And this is going to be taking place at the end of this month, so the end of June. The walk is going to be at the Windsor Great Park on the 30th of June, and it's hoping to raise funds for the campaign against living miserably. So that's the anti-suicide charity CALM. So there's a story there as I said, on AM Online, and anybody that can be involved, any way you can support. There are links on the news story there on AM's website that you can get involved, you can support, you can make donations. And there's a couple of links there as well through websites, through to Ben, with Calm Zone as well, which is calmzone.net, and also the Samaritans. So anybody that wants to get involved and can get involved and can support, this is all about mental health and well-being, and I know this is something very much close to you, isn't it, Karl, with things like this?
Yeah, it is. And I didn't have the pleasure in knowing the gentleman, but what a great cause, what a real need. And also, I think the walk is through Windsor Great Park as well. So if that doesn't actually do something for your well-being, I don't know what would.
Exactly. So I say you'll the links and they will be on your newsletter on Monday morning through the normal LinkedIn channel. So if you've not seen that and you do want to get involved and do want to support, then the links will all be available on Monday morning through the Motor Trade Radio newsletter. And the second shout out this week is again sticking with AM Online, and this is to Jackie Barker. And Curtis and I talked about the Barbara Cox Woman of the Year award. That is an annual award done in conjunction with Cox Automotive, but it is for the wider automotive industry to recognise women in the industry. And this year it's been won by Jackie Barker, who anybody who's not met and felt the inspiration that Jackie gives when you do chat to her. She's the Global OEM Strategy Director for Keyloop. And, congratulations to Jackie, because I know you are a listener to the podcast and on this prestigious award, and I think we're very much looking to see what you do with your bursary money that is part of the winning. But a great result there for Jackie in winning that award. So, and final shout out, and we'll talk a little bit more about this after today's break, but I think you've been up to a few things as well recently, haven't you, Karl? And we're going to share a bit of a tease with you now, but we'll talk a little bit more about it after today's break.
Yeah, I've been busy with lots of things on a most important level, family level. I've been busy doing some stuff at Banktop Farm with my girls, Helen, my wife, and Philippa, our daughter. Helen, by the way, is an automotive professional too. So I've got a strong woman at home myself. But I've been really mulling something over in the past few months, and I'm working on something that I never thought I'd actually do, because the podcast space is pretty crowded. But I think I've come up with an innovative way of actually giving back, rather than trying to monetize my experience. So I'll tell you more about that in a moment.
No, I do definitely look forward to listening to that. And as you say, the podcast space is getting a little bit busy these days. I think, there is enough for everybody in the car.
Yeah, I think so. I think it's about being relevant. So, and the listeners will determine whether we're relevant, and they'll vote with their on-off switch.
Definitely. I mean, I will be a listener, and I have obviously got the a little bit of inside information of what this is about. But as I say, Karl will be talking us through a little bit more about that later on in today's podcast. So do please stay tuned till after today's break.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines today will be mainly coming from Car Dealer, looking at fleet operators still not acting fast enough to keep pace with change, and that's from AFP with Lorna McAteer. Sticking with Car Dealer again, we're going to be looking at some of the financial announcements that have been hitting the headlines this week from Cambria, Barrett's of Canterbury from Motor Trader, back to Car Dealer with Motor Point, which has again been announced late this week, and then finally looking at the results from family-run business JTC 600. And then we will talk a little bit more about what's been happening this week around the tariffs and the EV sector. So going over to AM Online, and that Chinese car brands developing franchise networks most likely to succeed. And that's been some insight from the dealer sector through Startline's used car tracker. And then there's been a few stories with the Financial Times, and this is the big one that has created a lot of debate, a lot of discussion this week, and this is that the EU to impose multi-billion euro tariffs on Chinese electric vehicles. And alongside that, we've got a response from BYD and a little bit more around the 2035 deadline that's been announced in Labour's latest manifesto.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Well, Karl, we've got a few headlines to get through this week, and we're going over to Car Dealer to begin with. And this is a story from ourselves at Cox Automotive that fleet operators still not acting fast enough to keep pace with change. And this is from the Association of Fleet Professionals Deputy Chair, Lorna McAteer. And this is that large companies with fleets shouldn't rely solely on outsourcing vehicle management, and that fleet operators not keeping up with the transition to alternative fuels needs to consider the changes, and obviously party political manifestos failing to address regulation and labelling of vehicles to simplify management processes. So I mean, Karl, I don't know if you had a chance to take a look at this one, and Lorna was quite opinionated at the time on what's happening, and as a post-pandemic environment that, there's a lot of changes at the OEMs throughout the pandemic, how they were operating towards the fleet sector, and that some of the processes and relationships have broken down. And she's calling out very clearly that there needs to be a re-energy of the relationship between the OEMs and the fleet operators in the market.
I think that's a good way of putting it, that she's opinionated in that article. And I think it's good to be opinionated if your opinions are solid. And I read that article with real interest, and a couple of things stood out for me, Phil. One, just how complex it is now to run a fleet with those different power sources, drivetrains, etc. It's not easy. It's far from easy, and it's never standing still. The other good point I think she made was how, and we'll talk about politics and the forthcoming election in a short while. But if there was any more, as those clients of mine say in London, if there was any crinkle left in the teapot, any coffers left in the tin, surely we should be equalising the VAT on charging, because it's ridiculous that it can be so low at home and so high when you're out in the public. It's just crazy.
Yeah, I couldn't agree anymore. And some of this plays into the interview we did recently with Robert Forrester. And it's always very difficult having a conversation with Robert without getting into some kind of political conversation. But we're not, with things happening in the UK at the minute, we've got the government, let's say we've got the election on the 4th of July, but we do tend to make it very difficult to operate in the UK with, they say, whether that's down to different regulations and legislation. Like you say, it's very cheap. It's very, the gap between domestic and public charging is off-putting, in addition to the challenges that EV drivers face when actually out on the road and within that charging infrastructure, let alone the cost difference of charging the vehicle itself, is making it very difficult for this transition to electrification. And particularly, we know how the fleet sector is pinning up this transition to EV at the minute because, as we've discussed on the podcast recently, the public-private sector is not transitioning to EV, and it is really the fleet and business sector that is really supporting this transition at the minute.
I totally agree. I think fleet operators and actually any businesses, what they definitely look for is consistency, and that's what's missing right now. And as I said, we'll talk more about that later. But how can you run a fleet if you don't know where the policy is going to be before you start to defleet those decisions? So, really good article there.
And sticking with car dealer, but we've got a series of financials that have been published this week. It's that kind of period now when we start to get many of the annual and interim financials coming out. But we're sticking with car dealer, which is the first one, and this is from Cambria Automobiles, which is Matt Lavery's business and a supporter of the podcast. And this is that losses deepen at Cambria Automobiles in second year of trading after leaving stock market. So obviously this is referring to the fact that they delisted. And this is that Cambria Automobiles publishes accounts for the year to August the 31st of 2023. So obviously pre the fourth quarter of last year. I citing that the turnover dropped by almost a fifth, bringing the pre-tax loss worsening by 6% to more than 1.3 million. Now, there is going to be probably a bit of a common theme with the next few stories around these losses, that at the minute we're reporting much on the 2023 performance compared to prior year. But we know that 21, 22 were boosted years for the market when used car values were accelerating at such a rate and new car supply was in such short supply that margins for new cars were very high. So a lot of this year-on-year performance is coming from an unrealistic base point when we know that the previous years were such positive performance.
I think you're right. It's an interesting one. I don't know Mark. I know of him very well. I've worked with one or two of his senior people from time to time over the years, but I do know he's respected for the returns that he delivers, and you know, return on a share invested at Cambria when it was a listed company performed very well compared to the other several listed motor groups. So you'd have thought that anybody that wanted to buy back his business would get all the bad news out there early doors, in readiness for, you know, trying to mitigate the cost of the purchase. So I would assume that Mark did that, you know, properly, legally, professionally. So the impact on his results now must surely be about the market, because he knows how to make money. He's a strong operator. So I've been intrigued to know a bit more about that.
Yeah, and within the story, they do talk about the performance. They say turnover fell by 19% from 2.609 million to 2.114 million, and the company directors report, signed by Paul Budding on behalf of the board, highlighted the previous exceptional market conditions, which were caused by the unprecedented disruption of OEM supply chains, causing an imbalance with supply and demand, which is the point we're trying to make earlier. But obviously adding that not only did this end discounting on new cars, with some being sold at a premium, it also resulted in increased used vehicle supplies by up to values by up to 38% over that 2-year period. So really citing that although this performance is down year on year, as you say, there's some exceptional circumstances there within it that I think we can all say that even though that turnover has dropped from 2.6 million to 2.114 million, still a good level of turnover, albeit down year on year within that performance. So saying that the total units rose from 12,948 to 14,331. But the EBITDA dropped by 7.2% from 30.6 million to 28.4 million, with the return on sales declining from 5.11% to 4.16%. But I think there's probably many people that wouldn't mind a 4.16% return on sales at the minute, and a 28.4 million EBITDA. Would they, Karl? I think that's not a bad performance given the fall in year on year.
Absolutely. So you don't have to like somebody to respect their performance. I don't know Mark, but I do know he's a saucy individual, Mr. Lavery, but very easy to respect the numbers. So respect.
And moving over to Motor Trader, sticking with dealer performance, and this is that declining used car values hits Barrett's of Canterbury profits, and saying that the rapid fall in used car values impacted profits of Barrett's of Canterbury last year, and that the group saw a pre-tax profit fall from 56.9% to 2.2 million, and that turnover was up 6% to 276.5 million. So again, I think this is, but that we know we talked about it through the period of last year, and especially with the interviews that we hold monthly with Darren Martin from CAP HPI. We know that there was a realignment, particularly in the fourth quarter of last year with used car values. That did sort of take a lot of the dealer sector back to having to implement vehicle write-down, be it through stock or their demos and courtesy cars, etc. But again, it's kind of, we've got to put this again in context that although they are talking about a fall in profitability, the turnover rose by 6%, and they also do cite that they did see an increase in after-sales, saying that the turnover in after-sales actually rose to 56.1 million from 50.1 million the prior year. So again, still not a bad performance for the group.
No, I've got a few observations. I'm going to make these broad observations, not just about Barrett's. But I think COVID, over the last 3 or 4 years, I think some best practice and sound behaviour has been lost. Just like we hear that, car sales people that have joined in the last 2 or 3 years have never had to prospect, so they don't know how to do it. They were taking orders. I think some of the best practice around used car operations has been lost as well, because until quarter 4 last year, the market was incredibly kind. I've been in the sector for over 42 years. That's the first time where, in to a large degree, we've seen used car inflation. It doesn't happen unless it's a supercar or some sort of limited edition. They go down in value, not up. So I think it's interesting to see how best practices are playing out with some of those group used car operations. I'd like to be a fly on the wall, definitely in more of them. But I think also, without being, again, this is not about Barrett's, this is about the sector, without being unkind, and to use the much coined JFK quote, a rising tide lifts all boats, we've had some real good luck. We've had some real good luck in automotive retailing through COVID with regards to support, furlough, rates rebates, inflation in used cars, and new cars selling at full money or above. So we're back to a normal type of space, but a more volatile space in that the economy is not working for retailers at the moment. So for me, Phil, it's about the quick and the dead. If you're not close to the things that really matter, boy, it's going to sting you.
No, I can. I mean, to say we've sort of been in the industry long enough now. We can see this. We know that the sector has always been extremely resilient. Those that respond to change and get ahead of change will survive. They'll get through it. We are in this period of change. I think, to your point, we talked about this a lot in probably 22, definitely in 2023, that it was time to put the running shoes back on. We're back in a selling market. We had to get, and coin the phrase, the back to basics. We're no longer in an order taking market, which some may challenge that, but it wasn't very difficult to sell a new or used car through that period of a shortage of supply, when used cars were accelerating up to that 38%. And if you had a new car that was available for delivery, you had a buyer for it. So, I think you're right. I think there's a bit of a change going on, and many of the dealers did respond very quickly to it. Some not so quickly, but alongside of that, there's a lot going on in the space at the minute. But I couldn't agree more with that. And just quickly, before we break for the headlines, there's a couple more financial announcements this week that Car Dealer have published. The first one that I'm referring to there is that used car supermarket Motorpoint suffers massive deepening of losses in its most difficult year ever, saying that Motorpoint published its results for the year to March the 31st of this year, so that counts as the first quarter of this year, saying that revenue is down by nearly a quarter to 1.09 billion, and that the underlying pre-tax profit losses widened by 2.633% to 8.2 million, and that they reported a pre-tax loss deepened by 3.366% to 10.4 million. But brokers are confident about the future of Motorpoint. So, we've talked a lot about Motorpoint over the months on the podcast. They've been going through significant change. They've had to evolve with the new landscape. We know there are supply shortages of quality used retail cars that they will have to be working through. But again, they're still there, they're still active, and still, again, reasonable profit margins there, reasonable turnover. So we can't discount that. And then the final one that's been announced this week is that, again, in Car Dealer, the family-run JCT 600, which is a little bit more at my territory, I think, that one, Carl, in the northwest there. Profit slide has moved to agency hits turnover, and franchises are ditched. And this is, again, they published their accounts for 2023, so the year ending last year, saying that dealer group's turnover dropped by 2.8%, And also the pre-tax profit was down by 16.3%, saying that the Mercedes move to agency model cuts group's turnover by 64 million. So again, going through a little bit of a change, going through a realignment of their franchise operations and how they operate, who they align to. But again, still a good profit margin there, albeit down year on year.
Yeah, totally agree. John Tordoff knows how to make money.
Exactly.
He's a partner of choice. He's got some great brands. JCT's been around forever, built on solid foundations. So if he's reporting that agencies working against him, I think that's probably a true report. There are some serial underperformers in our industry that often look out the window and talk about the climate and policy and governments, and rather than actually looking in the mirror when they're having a shave and addressing the problem that way. That's not JCT 600. They're a top performer.
Yeah, they will make the hard decisions. They'll team up with the right franchise that they believe is the right choice for them, and they'll make the decisions. And again, I've watched that group for many years, and knowing John Tordoff and Father Jack Tordoff, I think again, very good group, very family focused, family run business there, and again, they'll get through this. It won't be an issue. It'll be just a case of realigning, refocus of what they need to do.
Really quickly, Phil. Just going back to the used car supermarket point. I'm sure Darren would be a better person to advise on this, but I think we're going to see the valuations calm down, or the depreciation calm down rather. But the volume is just not there. If you're a predominantly, purely used car operator without an after-sales business, which most of the car supermarkets don't have, you're vulnerable to residual values and to supply. And I don't think the supply is going to get back to where we were for many years to come.
No. I think I think this is key with this now, and you look at the sitting in the supermarkets with Car Shop and what was previously the Car People alongside the Car Shop there. The Peter Vardy's,
Peter Vardy's,
Pendragon with their car stores, etc., etc. We know that the market is changing. We know that the OEMs are trying to close leakage of their products outside of their franchise network. We're now in that fourth year of vehicle supply shortages that we're now starting to see impacted. So again, very difficult. And some of these supermarkets is working hard of where their channels of supply is coming from, what is their portfolio of vehicles in both age, mileage profiles, alongside fuel types. It is the fuel type and availability of products is starting to change. So you're right. I think there's a lot of that change going on, but I'm sure it's not the last time we'll talk about a supermarket and what they're doing in the sector.
Yeah.
I say, please do stay tuned, because I'll be chatting to Karl about the upcoming podcast that Karl was alluding to at the start of today's chat. So please do stay tuned until after the break, and we'll hear a lot more from Karl.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So, Karl, we couldn't have you on today. We chatted a little bit about what you've been up to and talking through some of those headlines in the first half of today's show. But as we mentioned right at the start there is a bit of a shout out, but we wanted to leave it until the second half of today's podcast just to chat through this initiative that you've been working on. So, as I say, this is something new. This is something you've been heavily involved with and been thinking about. So do you want to tell us a little bit more about what you've been up to and what the listeners should expect to get involved with?
Yeah, thanks, Phil. As I said when we started this podcast, I'm just about to do something that I never thought I'd do. The podcast space is pretty well populated. Some long established ones like Motor Trade Radio. Do we really need another podcast? Well, I think there's space for one, and I'm going to launch a podcast called Critical Friend, and it's going to be a 60-second soundbite type of podcast, and I'm going to do it in association with Cancer Research UK. And I suppose the best way to position this is think of it as a thought for the day, 60 seconds thought for the day, where I'll be sharing leadership observations from 20 years in professional services to the industry.
I can't wait to. I'm an avid listener of podcasts, so I will be listening to it. And I think this is going to be really exciting. I think that Critical Friend, 60 seconds soundbite podcast, and I think the fact that you've got involved with Cancer Research UK is a fantastic alignment of what you're getting involved with there.
Yeah. Well, a couple of things. First of all, I've called it Critical Friend because that's probably the label I've been given more often than not, along with Marmite back in the early days. But I've actually come up with my own definition for Critical Friend that I think fits for me and what I'm going to be doing on this podcast. And that's the trusted person that asks the provocative questions to understand the context of a situation and then provides candid feedback, ideas, and encouragement. And if anybody took a look at my LinkedIn profile over the years, there's plenty of people saying stuff like that. So sometimes there has to be a voice of reason. So I'm going to try and be that voice of reason for 60 seconds.
Fantastic. So, in terms of audience-wise, and this is for anybody, isn't it? Really, obviously, you've got your close network within the industry that you operate within, but who is your audience? Who are you looking at? You've got
any business leader. Any business leader, and we mentioned LinkedIn. I've got 2,500 connections on LinkedIn. It's not a huge amount, but I feel it's going to grow exponentially because the topics I'll be talking about, which are setting direction, creating culture, leading teams, and driving performance, they're needed now more than ever before. And during that 60 seconds, I'll be positioning some killer questions. I'll be sharing some fascinating facts, and I'll be offering some inspiring ideas. So I'm really focused on the audience, which are senior leaders, and I believe that the topics are going to spike their attention, and they'll engage and they'll share this stuff with their management teams.
And I think you've described it as like a conversation of Radio 4's thought for the day.
Yeah, if we're of a certain demographic, and
what are you saying?
Well, yeah, old fart. Back in the day, I was driving 50,000 miles a year, 40 to 50,000 miles a year. So I've definitely driven more than 1 million miles in my adult life. And those early doors drives, it was listening to Radio 4. So I was getting a bit of information and brain food along the way. So that thought for the day is where typically it might be a leader, community leader, social leader, religious leader would come on and share some thoughts. And quite often it really did make me stop in my track and think about the topic that had been shared. So that's what I'm trying to achieve. And I'll be doing it in a particularly frisky sort of way. I'll shock some people, some listeners. I'll really make them think deeply. And I'm going to give some ideas, because if you've been doing this, if you've been in the sector for 42, 43 years, if you've been in professional services, which I have for over 2 decades, 22, 23 years, I've had the luxury of witnessing many different ways of skinning the cat. I'm going to share some of those tips and tricks with the listener.
Fantastic. And you're going to have guests on as well, aren't you? I think you're going to be
chatting with people. I think probably quarterly I'll do an interview. I'm going to launch with an interview where I'm going to be interviewed so I can explain more fully why I'm going to do this. And I'm can I just position why I'm partnering with Prostate Cancer UK?
Absolutely. Please do. That's key.
This is really important. When most podcasts are monetized, I'm doing the polar opposite. I don't need to make money from this. It's purely a giving back type of operation. Some of your listeners might know, Phil, that just over 3 years ago, I was diagnosed with cancer. And it was the same cancer that killed my dad. And my dad died 20 years ago this month. So it's pretty poignant stuff for me. I've reached a point in my life, Phil, where the industry served me well for 4 decades. I've had the very good luck of having been diagnosed early with prostate cancer. So I want to pay that forward to the motor industry, which is predominantly male, sadly still, because there's a bloody big target market there. And by partnering with Prostate Cancer UK, I'm going to raise awareness to a great initiative they've got, which is the 30 seconds online risk checker. And by way, my podcast is going to be audio visual. And by way of the outro, there'll be the Prostate Cancer UK logo, there'll be a unique QR code, and you just hold your phone up to the QR code, takes you immediately to an online 30-second risk checker. And depending on how you answer the questions, it might actually suggest whether you make an appointment to see your doctor or not. And you may be aware that if you're over 50, you're in increased risk of prostate cancer. If you're Black, you have a very heightened risk of prostate cancer. And if you've got prostate cancer in your family, a brother or father, again, it's an increased risk. So what I'm trying to do is get people to take the risk checker online. If need be, go and get a blood test from their doctor. And the key thing I really want to say is lots of men don't do this because they think they're going to have a finger up their bum. Yeah. They're not. They're going to have a very simple blood test. And if that shows a heightened level of PSA, prostate-specific antigen, that will lead to an MRI scan. And neither hurts.
It is. I mean, I say I've known many people over the years, most recently in the industry. It's probably my age profile now that you start to hear these kind of things in my age cohort now that have either checked and found it out early, which is great, or a little bit too late, and it's a slightly different process. But again, it is all the time about the awareness, isn't it? It's about what to expect, getting it checked out. It doesn't cost. There's no cost involved, and to say it's getting it early. The earlier these things are diagnosed, the earlier they can be resolved and sorted out, as you know. So I mean, fantastic cause with that, and just finally, Karl, if you were to sum up for the listeners in one sentence, can you sum that up of what you're involved with, what it's about, what you're doing in one sentence?
I'll have a go. I'm just going to preface it with this. I promise your listeners I'm not going to go on about prostate cancer like some sort of reformed smoker that's negging everybody else out for having a fag. Critical Friend is a 60-second soundbite podcast. It's around business topics that are important to the target audience, and it's in an association with in association with and in support of a charity that is so close to my heart.
Fantastic. Well, I know you will, and for the listeners, when the links are available, QR codes available, we will share it on the podcast. We'll share it through the newsletter, the Motor Trade Radio newsletter. So, I mean, Karl, fantastic. What you're getting involved with there, what you're doing sounds absolutely awesome. I will certainly be a listener of it, and I do wish you all the best. And anybody that is listening to today's podcast, please do get involved where you can and support Karl on this new fantastic initiative. So thank you for that, Karl.
Cheers, mate.
And just finally, back to the headlines, and we've left a couple of biggies right to the back end here, so apologies, listeners. But we're heading over first to AM Online, and again, a story that was published this week just ahead of the EU announcement. And this is that Chinese car brands developing franchise networks most likely to succeed, says dealers. So Chinese EV manufacturers adopting a traditional franchise model are being tipped for successful UK market entry. And this is according to the latest survey from Startline Motor Finance. And this is that the findings through the June used car tracker said that 36% of dealers reckon that Sepang is the Chinese electric vehicle manufacturer most likely to succeed in the UK, followed by Omoda at 34%, BYD at 31%, Lincoln Co at 24%, and then down there at the end there, with 24% is NIO. And that they do cite that other new entrants named by dealers include Jayco, GWM Aura, and Zika, and finally Hyphy. I'm never very good at pronouncing that one. It's HIPHI. It sounds more like some laboratory algorithm there, but so I mean, this is interesting, this, isn't it, Karl? And you've been in the industry a while, as I have, and some of these brands, they've got to make a mark, and we know that consumers are changing, consumer behaviours are changing, consumer attitudes towards brand loyalty is changing. But clearly, this is the dealer market is actually getting behind some of these new Chinese entrants, and we'll get on to a little bit more about that shortly, which makes this even more interesting. But really, the dealers are really supporting the growth of these new Chinese manufacturers coming into the UK sector.
Well, they are. I'm not sure what the motivation is, though, whether that's fear of being left behind. And there was a term in the press a couple of weeks ago, the Great Conservative Extinction, when the pundits were predicting the size of the Labour win, if that's what happens. But I think there's some real concerns about, and we'll discuss it in a moment, but I think there's some real concerns about the dominance that China's going to have in Western Europe and the UK. So I think it's one of those, get on the bus or get left behind.
Yeah, and conversations with the dealer network, it is one of them that, is it short term? Is it short-sighted to get involved with some of these manufacturers, and inevitably will they want the same as the other manufacturers, that they want to go into agency and go into direct sales, and that in the meantime the partnership with the UK dealer network is really more about establishing a brand and establishing an after-sales network, and that's what they clearly do want and they do need. But again, is it that some of the dealer network is just wanting, they're not quite confident on some of the legacy brands that they've been operating under with the changes that are taking place, and that they see this as a fresh opportunity? I think at the minute it's kind of a bit of an unknown, isn't it, with what the outcome long term will be for this. But clearly the dealer sector are seeing this as an opportunity to partner with some of these Chinese brands that are clearly looking at significant growth in UK and Europe, and are there with price entry product, and looking to support the dealer network with lots of marketing and support to make the brand build their brand awareness.
I think there'll be a myriad of reasons, Phil, but they're on a march, and they're marching over here. So it's get on board or get left behind, unless there's some sort of geopolitical decision, impact war policy. They're coming. So engage or get left behind.
And on that point, we've got three stories here that are kind of in a way connected. Two from the Financial Times, one that was just published as we started to record today's podcast from Fleet News on the Labour manifesto. But first, with FT, and this has been the story of the week in terms of commenting and opinions on it. And we discussed that this was coming. And this was coming on the back of what's been happening over in the US there with tariffs trying to block the Chinese manufacturers entering the US market. But this is that the EU to hit Chinese electric cars with tariffs of up to 48%, and saying that Brussels acts against imports. It's as it says, are heavily subsidised by Beijing, despite German warning move could spark trade war. And this is that the European Commission had notified car makers on Wednesday of this week that it would provisionally apply additional duties of between 17 and 38% on imported Chinese EVs starting next month. So, and this is that the duties will be applied on top of existing 10% tariffs on all Chinese EVs, depending on the extent of which they complied with EU anti-subsidy investigation into electric car makers that was announced in September of last year. So this is quite a bold, big move from EU against those Chinese manufacturers on their vehicles entering the European market.
It is as a start point. I've always been a free marketeer, so I'm suspicious of subsidies because often that in our country back in the day in the 60s, 70s, 80s, there were subsidies that were propping up poor businesses. So I'm not in favour of that. However, it's hardly going to be a free market when you read that 3.43 euros or 3.76 billion dollars have been supplied to BYD, just one organisation. BYD, currently I think the biggest battery electric vehicle manufacturer, just slightly ahead of Tesla. It's not a free or fair market if there's subsidies in the Chinese car manufacturing of that level. So I'm not surprised that it's spooking European manufacturers. And I saw one stat in readiness for this that between 20 and 21, the Chinese exports exactly doubled. I'm sure it will say that or more for the next level of data that's available. So they're on a march. They've got an unfair advantage, and it's hardly surprising that home market producers are concerned. We're going to have a competitive lineup and a competitive price, but boy, it doesn't feel very equitable when there's subsidies of that degree.
No, I couldn't agree more. I think we know that the export out of China is now around the 30 million vehicles, and that's been accelerating year on year for the last few years significantly, as you cited there, Karl, and that's been against a contrasting consumer market in China. So the vehicles are being built; they've got to go somewhere. They're on the boats, they're on the container ships, they're heading out. We know that they're going after North America. They know that they're going after Europe, and we definitely know from the previous story there that they're coming after the UK, and they're coming in volume with cost efficient entry points to the market, and this is where to your point there, how long can this continue? What is going to be the impact on the legacy OEMs, the incumbent OEMs that operate in the space? And the question is whether the UK, and there's been a lot of conversation, I think I was asked to comment on it this week, as what if the UK, because the UK were considering following similar tariff imposed as the EU have done, and it's a difficult one, but it's kind of, is that really the right move?
It's inflammatory, isn't it? You're parking your tanks on somebody's lawn when you start imposing tariffs like that. But for an alternative view, I spotted on LinkedIn from Alistair Cassells of McIntyre Hudson Associates. Obviously, you know Alistair well. He's an industry stalwart. And he said, maybe we should be manufacturing some of those Japanese brands here in Europe and the UK. And he's smarter than the average bear, Alistair Cassells. I rate that guy highly. So maybe a bit of a segue approach, but they're coming. They're coming. Be certain of that, just like the Japanese brands came in the 60s and 70s.
Yeah, and just ahead of the election, and we haven't really got time to talk politics, but I think this is where questions around the industrial strategy for the UK and what's happening and the support for automotive sector in general in the UK, from investment into battery technology, battery manufacturing, car manufacturing. There's a lot to consider as to what will happen with this. And there has been a response in the FT again, and this is that tariffs will do little to slow BYD's advance into Europe, and saying that it makes greater financial sense for Chinese EV makers to accelerate plans to place production into the UK, and saying that the hostile imposition of the tariffs would usually mean a slump in the targeted company's shares, not for BYD. The prospect of steep European tariffs on the electric car imports from China had the opposite effect this week on the country's biggest maker of battery electric vehicles, that the Hong Kong listed shares jumped as much as 9% on Thursday when this was announced. So it did have a slightly opposite effect on Chinese, particularly BYD's share price there. And finally, I mean, I've commented a couple of times on the forthcoming election, and we don't want to make this into a party political podcast. There's enough people doing that in the sector. But one thing that has broke this week, and we have talked about this a couple of times, Curtis and I, on previous podcasts, and that this week the Labour manifesto was published on Thursday of this week, and within that, and Gareth, a friend of mine at Fleet News, Gareth Roberts, pulled this story and said that Labour pledges to restore the 2030 ICE ban for cars, and that within the manifesto they have vowed to reintroduce the ban on the sale of new internal combustion engines from 2030, but makes no mention of whether that will be applied to vans. Now, you and I chatted briefly before today's recording, Karl, and we know that at the time when the 2030 deadline was pushed out to 2035, it was very clear coming out from the OEMs, it made very little, if any, difference on their strategy plans for the transition to EV. The ZEV mandate did not change in the deadline of the percentages that they need to achieve. What it did do is create confusion for the consumer, that they felt that they had another 5 years to make their decision to transition to an electric vehicle. And now this could cause that same confusion again, with very little difference to the transition period for the OEMs.
Totally agree. I had the pleasure of speaking at a business club where Paul Johnson, who's the director of the IFS Institute of Fiscal Studies, spoke the meeting before, and he made the point really, really solidly in a non-political way. The UK does not have an industrial strategy, whether it's OEMs, retailers, or any business or consumer. I think if we could just have a strategy and then a plan that is consistent, maybe we could hang our hat on that, because at the moment we've just got a yo-yo of ideas, which is no help whatsoever. And that's regardless of your colour and where you're putting your cross on the 4th of July. Let's just try and get a strategy and a plan. That would be a start.
Yeah, it'd be nice just to know where the market, what the future on it. I think they call it flip-flopping and things like this. I think the general view is that all these changes and decisions and deadline movements and U-turns, however you describe it, make it very, very difficult for businesses to invest in long-term strategies, particularly in the industry sector. So I couldn't agree more. I think it needs to calm down, it needs to stabilise, and then they can focus on strategic investment around the UK. So, I mean, Karl, I know it's been a bit of a long chat today, but I think, firstly from Curtis and I, thank you for joining me on today's podcast. It's been an absolute pleasure. Hopefully you've enjoyed it as well. I know we've touched on quite a few stories this week, but clearly it was key to get you on. I know you enjoy it and you have a slightly different lens on what's happening in the sector, but also the new initiative that you're working on as well is fantastic. So a huge thank you from me and Curtis for joining me today on today's podcast.
It's a pleasure and privilege. Thank you.
So again, many thanks to everybody for joining us on today's podcast. Remember to check your newsfeed on Monday morning through LinkedIn. You'll get the latest newsletter from Motor Trade Radio, which will include all the links to today's podcast, and we will share, when they're available, the links to Karl's new podcast, which is the new 60-second soundbites podcast, Critical Friends. So please do stay tuned for that. If you haven't listened to the recent interview with Robert Forrester, the feedback on that has been fantastic. Do have a listen. He doesn't get involved in politics too much, but he does touch on it a little bit, as we would expect from Robert. So please have a listen to that. And Curtis will be back next Saturday with the usual headlines. So please do stay tuned for the next podcast next Saturday. And again, thank you for joining me this week, Karl, and it's a goodbye from me.
I think it's customary to say, and it's a goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.